Hello traders, Gary Wagner here. Just about 10:20 in Honolulu, 4:20 in New York. It is Tuesday, day after Labor Day, September the 6th, 2016, and this is the Daily Report for Gold and Silver. And what a day to be able to report a very, very strong upside surge, tremendous rally in the precious metals overall. We'll talk about the net causes, of course, of this dramatic rise and the key precipitator, which is the US dollar losing about a full percentage on the day. But as you can see, gold is up about 2%. So it's more than simply a dollar weakness today, 1354.40. with a low of 1325.50 and a high of 1357.20. That, of course, is when we look at COMEX. We did recommend long positions last week. We are long gold. We are long silver. We'll take a look at both. First, let's take a look at net changes in spot gold. That is trading at $13.49 and change, up about $22, 1.71% gain, low 25, high 52. Over to silver. We are long silver on this particular move, up 2.76%. That's spot at $20.01, putting it up about 53 cents on the day with a low of 1947 and a high of 2012. And then finally, I want to look at COMEX futures in silver, 2013, up almost 4% on the day. Tremendous rise with a high of 2022 and a low on the day of 1938. So traders, here we are, first day after really the official conclusion of summer, Labor Day being yesterday. Tremendous rise in the precious metals markets, about a 4% rise in silver, we're long silver, about a 2% rise in gold, we're long gold. If you recall from last week's show, I had been under the belief that we were approaching a pretty critical area, and that area really was this 1308. To me, that represented a key fib level because in terms of a fib retracement, when we do a fib retracement from 1200 up to 1376, and that's pretty much what we are looking at as a wave one here, and this really oscillating market, which took us to the lows on one occasion, back up to give us this double top, and then finally to give us this double bottom, or what we call a flat in the market. I really had a sense that we had a high likelihood that we would in fact see this market begin to trade higher. We had this red candle, of course. Then the following day we had an engulfing bullish. This, of course, was Thursday of last week. And then Friday came along. And Friday, of course, we had some jobs data that came out. Market was all over the place. But once that report came out, it came out really a little less than expected. I saw the market begin to take off. All of the parameters kind of matched up. The stars kind of were in alignment, and that's what caused me to signal a buy trigger in both gold and silver. Traders, we got in this particular trade roughly at about 1328. It was a very fast market. Some traders got in as low as 23. Some might have gotten in at about 28, 29. We're marking ourselves in towards the top of that, and that would have been right in here. And then, of course, today, this market absolutely took off strongly. As I said, up about $27, $28 on the day. Now, currently, we have our stops. Our stops are sitting below these lows here at 1305. We will certainly want to move them up at a convenient point this week. To give you an idea of what I'm looking at right now, I'm looking at this 1340 area as a potential level to move that stop up. And that's simply because you have these series of lows that really come in right before the market dropped and dropped hard to form this double bottom. You can absolutely see an A, a B, and a C, and that concludes this wave 2. I now believe we're in wave 3. As you know, I have revamped my Elliott wave count. Realize that, as in anything, if we're not open to, as new data comes in, I should say, if we're not open into looking at the way our models are currently structured and adjusting them when need be, then we're very, very much too rigid in our approach to trading. And so as you can see, we've absolutely adjusted our Elliott wave. I feel very, very strong that our current count is the best count I can offer you. And of course, when we look at it, this hasn't changed. Our wave 1, then we had our A, our B, our C. That concluded a wave 2. We're now in a minor 3. This is a minor 1, a minor 2, and we're in a minor 3. Of that minor 3, I now believe we've completed wave 1. I believe we've completed wave 2, and I now believe that we are in wave 3. Now, why does that make such a difference? Well, primarily because wave 3 cannot be the smallest of any of the impulse waves. And the way that we've redefined our Elliott wave count, we are looking at just a tremendous wave 1. So if wave 1 and wave 3 are just equal, you are looking at approximately $170 rally that we just had, the sell-off, which was a 38% retracement. And so, as I said, traders, I would expect this particular rally, and the rally, of course, will come with peaks and valleys, I believe, but this rally should absolutely take us above $1,400 per ounce. Let's take a look at silver. So traders, silver, tremendous move to the upside. This is a weekly chart, this being the first trading day, and look at that move. I'll try to convert it to a daily time permitting, but here's the key in the way that we're looking at it. As you know, typically I will make our recommendations in gold. Our traders that are trading silver, they're going to piggyback with us. They're going to buy when we buy. They're going to sell when we sell. However, I felt inclined on this particular move. I felt so strongly about the potential upside of silver that I added it, basically recommending that all traders should be long gold and long silver. Now, there were a couple of key areas that we were looking at, and this 61% retracement, and that, of course, is a retracement from 1366 up to 2156. It's this huge level. This is our 61% retracement. We absolutely found support as the market came down. We also had historical data that showed us that at one point this was also a strong level of resistance. Floors and ceiling are always going to be the same. It simply depends where you're standing, whether you're on the first floor looking up or the second floor looking down. Now, that being said, we've seen this market move and have a tremendous move. Now, one of the other key factors, of course, this is an engulfing bullish, and now we're getting confirmation. That, of course, is on a weekly. But what we saw in silver that I felt so compelled to make the move was as follows. As you can see, we had this really rounded bottom down here in which we had these series of lows come into the market. After hitting these highs, we know that we had resistance up here just below $21. We know that we had support right at around $18.50. And then we had this red candle, star, green candle, and of course what that signifies is really a strong variation off a three-river morning star. Following day, this was Thursday, we got our confirmation. So we entered the market right in here. I believe this is, we're looking at spot, so this is yesterday or Sunday's trading. But we entered the market here. Traders, we are long roughly at 1917. We've got a little over $1 on the trade, which is a great move, a tremendous move in silver for the length of time that we have been at. I really don't see any kind of resistance till about 2070, so that's another 50 cents from here. And the key is this: I believe that gold and silver will trade in tandem. I'll put together my current count in silver over this next week so we can get a better handle on our exit strategy. But for the meantime, maintain your long position in gold, maintain your long position in silver. Stops for the meantime, maintain them. We will be trailing them up within the next 24 to 48 hours. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.